Daily Candle Review for May 25th, 2026. Candle score, 53. Neutral. Bitcoin held the ground it recaptured yesterday. After the dramatic intraday swing on Saturday, a flush to $74,300 followed by a sharp Iran deal bounce. Sunday's session was uneventful by comparison. BTC hovered in a narrow band around $77,000, closing the UTC candle at approximately $76,988 for a modest 0.34% gain. Volume declined sharply to $23.3 billion as weakened liquidity took over. Ethereum underperformed slightly, dipping 0.8% to $2,102. The broader altcoin market continued its rotation theme. Hyperliquid hit record highs following U.S. spot ETF launches, and AI tokens maintained elevated interest. Former Credit Suisse head Mark Connors argued that Bitcoin has exited its longest-ever period of underperformance versus the S&P 500 and is positioned to outperform stocks, bonds, and gold as inflation persists. The Fear and Greed Index edged up from extreme fear to fear, suggesting the worst panic may be subsiding, but conviction remains low. Outlook. The immediate test comes Monday when U.S. equity markets reopen and we get fresh ETF flow data. If institutional selling resumes at last week's pace, $1.26 billion weekly outflow, the $74,000 to $75,000 support zone will be tested again. However, the Iran deal removes a meaningful geopolitical tail risk, and strategy's relentless buying provides a soft floor that has consistently absorbed selling pressure. Bitcoin needs a decisive close above $78,000 to shift the short-term narrative from dead cat bounce to genuine reversal. We'll check back tomorrow.